Why is one of the richest and most advanced nations in Asia suddenly buying massive amounts of gold? What does Singapore know that the rest of the world doesn't? As global economies face uncertainty, inflation climbs, and digital currencies dominate conversations, Singapore's quiet but powerful move into gold has captured the world's attention. In this video, we'll uncover the real reasons behind Singapore's growing gold reserves in 2025, from national security and economic strategy to global influence and financial independence. Singapore is not just another small nation, it's a financial powerhouse, a trading giant, and a symbol of stability in Southeast Asia. Yet, even with its strong dollar reserves and high-tech economy, the country is choosing to store more physical gold. What's behind this strategic decision? Is Singapore preparing for a financial reset, a weakening US dollar, or perhaps something even bigger? Stay tuned as we break down the top 5 powerful reasons Singapore is buying gold and what this means for investors, citizens, and the future of global finance. If you love learning about economic shifts, geopolitical strategies, and how small nations make big moves, make sure to hit subscribe, tap the bell icon, and join our global community here on Infosphere, where we explore how nations are shaping the future. Protection from a global financial crisis. Singapore's first major reason for buying gold is protection against global financial uncertainty. Around the world, economies are showing signs of strain, from high inflation in Western countries to instability in major markets like China and Europe. Singapore understands that in times of crisis, paper currencies lose value, but gold remains king. Historically, whenever financial systems have faltered, nations that held large gold reserves maintained their economic power. Singapore, with its sharp financial foresight, knows that relying solely on the US dollar or other foreign reserves could be risky. The global banking system is more interconnected than ever, and one collapse can trigger a chain reaction. Gold, on the other hand, is a universal store of value. It doesn't depend on a country's government, interest rate policy, or economic outlook. Moreover, with central banks worldwide increasing their gold holdings, Singapore's move is part of a broader trend, but with its usual calculated precision. Experts estimate that in the last 3 years, more than 50 countries have boosted gold reserves as a hedge against currency volatility. For Singapore, a nation that thrives on trade and finance, this is not a trend, it's a shield. Gold provides financial independence, helping Singapore ensure that even if the global financial system crashes, its reserves will retain value. In short, gold is Singapore's insurance policy against the next economic meltdown. Diversifying away from the US dollar. The second reason lies in reducing dependence on the US dollar. For decades, Singapore, like most of the world, held a significant portion of its reserves in US dollars. However, as geopolitical tensions rise and America's national debt crosses $30 trillion, trust in the dollar's stability is fading. Singapore's central bank, the Monetary Authority of Singapore, MAS, has been quietly rebalancing its portfolio. Instead of keeping all eggs in one basket, it's spreading its wealth across multiple assets, gold being the safest. By doing so, Singapore is sending a clear message. It wants to protect itself from dollar depreciation and potential sanctions risk. In the modern global economy, where political tensions can lead to asset freezes or financial restrictions, gold is untouchable. Unlike digital assets or dollar reserves, gold cannot be sanctioned or seized. This independence is crucial for a country that positions itself as a neutral global financial hub. Furthermore, the dollar's long-term weakness is becoming evident. With countries like China, India, and Russia promoting trade in local currencies and building alternatives to Western financial systems, the world is slowly shifting toward a multipolar economy. Singapore, always forward-thinking, is preparing for that transition, and gold is the bridge that connects it to the next global order. Strengthening its role as a global gold hub. Thirdly, Singapore is investing in gold because it's aiming to strengthen its position as Asia's premier gold trading hub. In recent years, the country has seen an increase in gold imports, refining facilities, and storage infrastructure. The Singapore Freeport, one of the most secure gold storage facilities in the world, already houses billions of dollars in precious metals. Unlike other nations, Singapore doesn't just buy gold for its reserves, it's building an ecosystem around it, trading, refining, storing and investing. This positions Singapore as a global gold capital, much like Switzerland in Europe. The government's strategy is clear: attract investors, hedge funds and wealthy individuals from around the world who want a safe, tax-efficient place to store their gold. By increasing its national gold holdings, Singapore boosts investor confidence, showing that the country itself believes in the metal's future. It also strengthens the credibility of its gold market. This strategic alignment between policy, investment and infrastructure ensures that Singapore remains the center of Asia's precious metal trade, even if global systems change. In short, by buying gold, Singapore isn't just protecting itself, it's also profiting from gold's rising global importance. Preparing for a digital gold-backed economy. The fourth reason is more futuristic. Singapore may be preparing for a digital gold-backed currency system. As global economies explore digital currencies, trust and stability remain key challenges. Gold offers both. Singapore, known for being at the forefront of financial innovation, could be positioning itself to integrate gold into its future digital economy. Imagine a digital Singapore dollar partially backed by physical gold, a blend of technology and tangible security. This concept could make Singapore's currency one of the most trusted in the world. By accumulating gold today, the nation ensures it has the assets to back such an innovation tomorrow. Singapore is also home to some of the world's most advanced fintech institutions. The MAS has been running pilot projects on central bank digital currencies, CBDCs. If the global financial system shifts toward asset-backed digital money, Singapore's gold reserves will give it an unbeatable advantage. In a world moving rapidly toward virtual finance, real assets like gold offer the credibility that digital currencies desperately need. Singapore's leaders clearly understand this balance, and they're preparing for it before anyone else. Strategic response to global power shifts. Lastly, Singapore's gold-buying strategy reflects a response to global power shifts. The balance between the United States, China, and other emerging powers is changing fast. Trade wars, technological competition, and political uncertainty make the world increasingly unpredictable. Singapore sits right in the middle, economically tied to the West, but geographically and culturally connected to Asia. To navigate this delicate balance, Singapore is investing in neutral assets like gold, which are not tied to any single political system. Gold gives Singapore geopolitical flexibility. It can trade freely with any nation, remain neutral in financial disputes, and retain independence from superpower dominance. It's also a quiet signal of confidence, showing that Singapore doesn't rely on any one ally to secure its future. By increasing its gold reserves, Singapore ensures that whatever happens, whether it's a global currency war, trade restrictions, or new alliances, it will remain economically sovereign and financially stable. Gold is not just wealth, it's freedom. So, what does all this mean? Singapore's move into gold is not random, it's strategic, intelligent, and deeply symbolic. In a time when the world is shifting toward digital assets, fragile markets, and unstable politics, Singapore is going back to the most trusted asset in human history, gold. It's a lesson for the world. Power doesn't only belong to nations with the biggest militaries or largest populations, it belongs to those with foresight. Singapore's leadership knows that financial security is the foundation of independence, and gold is the ultimate key to that independence. As other countries print money, accumulate debt, and depend on fragile global systems, Singapore quietly builds real wealth, gold that cannot be hacked, devalued, or destroyed. So the next time you hear about Singapore buying gold, remember, it's not fear, it's strategy. It's not retreat, it's preparation. Singapore isn't just surviving the global economic storm, it's preparing to lead the next era of financial stability. If you enjoyed this video, hit like, drop your thoughts in the comments, and don't forget to subscribe to Infosphere for more deep insights into global trends, finance, and geopolitics, because understanding the world today means preparing for tomorrow.